Hello and welcome. You're watching Money9's weekend special of Companynama, where we bring to you all the action from the corporate and startup world. I'm Shrestha Tiwari. Over to the corporate updates first. Airtel has announced a price hike, increasing the cost of its minimum recharge plan by nearly 57%, a huge increase in a single go. The company has increased the price of its minimum recharge plan from 99 rupees to 155 rupees, a hike of 56 rupees. Airtel had announced the price hike in Odisha and Haryana in November 2022 and has now announced a wider rollout covering 7 more regions including Andhra Pradesh, Bihar, Himachal Pradesh, Karnataka, Northeast, Rajasthan and Uttar Pradesh West. Airtel's new base plan is not only costlier, it also offers reduced validity of 24 days. The telecom had earlier announced a price hike in November 2021 as well, increasing the price of the base plan from 79 rupees to 99 rupees. Now, during this hike, prices of its popular plans were hiked by up to 25%. Reliance Retail has acquired Telangana and Andhra Pradesh-based footwear and apparel retailer V Retail Private Limited, which operates a retail chain under the brand name Centro Style. However, Reliance did not disclose the financial details of the deal. According to industry sources, the acquisition was completed during the last quarter. V Retail operates 32 Centro stores in Andhra Pradesh, Telangana and Karnataka, and it looks like Reliance Retail is on an expansion spree, and in the last 2 to 3 months, it has acquired several brands including Socio, Lotus Chocolate and Campa Cola as part of its FMCG ambition. In December 2022, it also acquired a 100% stake in a German firm, Metro AG's wholesale operations in India for 2,850 crore rupees. And Zomato is rebranding Instant, its 10-minute food delivery service, and it's not completely shutting it down, a company spokesperson has said. Now, this comes amid reports which have claimed that the company was planning to close Instant, launched less than a year ago, owing to tough market conditions. However, Zomato's spokesperson has clarified that it was working on a new menu altogether for the service. The food aggregator had launched Instant in March 2022. The stocks fell 14% intraday on January 25th, which is the steepest fall since January 24, 2022, when it saw a 19% drop. Meanwhile, Zomato has relaunched its loyalty program and has rebranded it to Zomato Gold. The new program replaces its erstwhile versions of Pro and Pro Plus that were likely to be discontinued for both the new subscriptions and renewals in the early Q2 of FY23. And for the first time since its launch in 2015, Vistara has seen a profitable quarter when it has registered a net profit during October-December due to growth in operations and revenue. The airline has crossed the $1 billion revenue mark and has remained EBITDA positive in the current fiscal year and reported a break-even for the first time in the quarter. However, the airline did not disclose the actual profit figures. On a year-on-year basis, Vistara grew its capacity and passenger traffic by 37% and 47% in the third quarter. Notably, this Tata carrier turned profitable at a time when Tata Group is seeking to consolidate its 3 brands, that is Vistara, AirAsia and Air India. India's Adani Group has said that it plans to spin off more businesses by 2028 and dismisses any debt concerns. As per reports, the Group Chief Financial Officer Jugeshwinder Singh has said that the corporate house plans to spin off or demerge its metals, mining, data center, airports, roads and logistics businesses. He also dismissed the recent concerns raised by analysts over its debt accumulation. In more news, Adani Enterprises on January 21st also said that its 2-step subsidiary Agneya Systems Limited has formed a joint venture with the Bulgaria-based Armaco JSC for defense businesses. Armada Defense Systems Limited was incorporated on January 20th, 2023 in the ratio of 56:44, with ASL holding 56% of the stake and Armaco JSC holding the remaining 44%. In other news about the Adani Group, it has responded to the 88 questions that were raised by the Hindenburg Research in its Jan 24th research report on Adani Group. The Ahmedabad headquarter group has said that 21 of the questions raised were responded in the public disclosures made in its 2015 Adani portfolio presentation. Adani Group has said as far as the accounting or fraud assertions investigation made by Hindenburg is concerned, it is devoid of facts. Post this, stocks of Adani Group continue to remain under pressure on 27th of January, falling up to 20% in the morning trade after the US-based investment research firm Hindenburg Research made the damaging allegations. And over to the segment that focuses on major controversies and disputes around corporates. Let's take a look at all those corporates that were on the radar this week. Lenders to debt-ridden Jet Airways on January 24th moved the NCLT opposing the ownership transfer to the JKC consortium as per media reports. Lenders have filed a plea in NCLT opposing NCLT's January 13 order that permitted ownership transfer to JKC. Less than 2 weeks ago, the Mumbai bench allowed the applications filed by JKC against the lenders of Jet Airways, paving the way for transfer of ownership of the airline to JKC 18 months after it was declared the winning bidder. With the effective date reset as November 16th, JKC has until May to settle its dues and take over the management control of Jet Airways. Last week on Companynama, we had told you about JKC moving the Supreme Court challenging an earlier order by the NCLT which had asked its to clear the employee dues totaling 250 crore rupees. Banks have completed the transfer of 9,234 crore rupees of JP Infratech loans to the National Asset Reconstruction Company, marking the first acquisition for the government-based bad loan aggregator a year after the company started operations. IDBI Bank CEO Rakesh Sharma has confirmed that the transfer without naming the account, and the IDBI Bank is the lead lender in the account with dues of 3,750 crore rupees. Sharma also said that the transfer to NARCL will reduce the bank's gross non-performing assets by 2.2% points. The JP transfer is a milestone for NARCL because it is the first and the largest account transferred by the banks. And in a latest, SEBI is likely to move the Supreme Court against an order passed by the Securities Appellate Tribunal (SAT) in the case pertaining to unfair access to the NSE's co-location facility. The 625 crore rupees disgorgement figure was arrived at by SEBI based on the revenues earned by NSE during the years when its co-location architecture was allegedly compromised. Earlier, on January 23rd, SAT had set aside the market regulator's disgorgement orders against NSE and its former top executives Chitra Ramakrishna and Ravi Narayan in the co-location case, saying that the NSE had not indulged in any unethical act or unjustly enriched itself. Moving on to our final segment of the show, let's find out what was this week's updates in the startup world. Developed by an IIT Madras incubated startup, BharOS is being pitched as India's answer to Google-owned Android and Apple's iOS, the two most dominant mobile operating systems in the world. Both government organizations as well as private sector enterprises that require stringent privacy and security infrastructure are in talks with the IIT Madras incubated J&K Operations, which has developed India's first indigenous mobile phone operating system, BharOS. J&K was incubated by IIT Madras non-profit establishment Parvata Technologies Foundation, which is funded by the central government. On 24th of January, Minister for Telecommunications and Information Technology Ashwini Vaishnaw and Education Minister Dharmendra Pradhan successfully tested BharOS, making video calls and audio calls. The indigenous OS is another step towards Atmanirbhar Bharat, although there are many unanswered questions about BharOS and whether it can emerge as a true competitor to Android. But it is clear that India is taking a page out of China's playbook in developing its own local tech ecosystem to fuel the economy. The Bengaluru-based ride-sharing company Rapido's losses rose 2.6 times. Losses widened to 439 crore rupees in FY22 from a loss of 160 crore rupees in FY21 as it hired more employees and spent more on marketing after the pandemic. It led to an increase in total expenditure from 254 crore rupees to 596 crore rupees. Employee benefit cost rose 73%, and while the advertisement and promotion expenses jumped 5 times to 176 crore rupees from 33 crore rupees in FY21. India's IT and startup sectors may lay off 15,000 to 20,000 employees in the next 6 months, battling a slowing demand after the hiring frenzy of the last 2 years, inflated salary costs. Pressure from investors and an expected global recession and the domino impact of global layoffs have resulted in staff cuts. Recruitment consultants have expected that fewer hirings mandates in the coming months will take place and have decided not to venture into new businesses for the time being. And with that, it's a wrap on this week's Companynama episode. See you again next week with more corporate and startup updates. Until then, go ahead and download the Money9 app and grab Money9's latest and exclusive content on Budget 2023. Have an amazing weekend and stay tuned to Money9.